It is a special for all of the senior citizens out there. One of the primary concerns that these individuals have is how they're going to manage their monthly expenses. Their cash flow is of paramount importance. Mrin Agarwal, the founder and director at FinSafe, is joining in. Thanks so much, Mrin, as always, for taking the time, and good evening to you. First of all, before we get into real estate, what are the fixed income investments that one can consider if they are senior citizen to get that peace of mind, without having to worry about anything?
Good evening, Alex. As always, a pleasure to be on your show. Yes, there are some fixed income options that are available that senior citizens can use to generate regular income. Of course, you have fixed deposits, and the good thing is that we are finally seeing some rates move up. So, fixed deposit returns are between 5.5% and 7%. You do have the senior citizen scheme and the PM Vaya Vandana Yojana, which both give you 7.4% return. And then, of course, you have the RBI bonds with 7.15%, and the post office monthly income scheme, which gives you around 6.7% and odd. Now, the thing with all of these schemes is that all of these schemes are fully taxable. However, they do give you a guaranteed regular income or a regular return, which you can use for your monthly expenses.
Incidentally, this morning on our WhatsApp number, we got a message from a senior citizen, or in fact, I should say somebody who's close to retiring, central government employee, said that they built a corpus of about 1 crore and they haven't yet invested in the equity market. They're looking to do so. This was on our show Buy Now, Sell Now in the morning, and they were saying that I want to put 5 lakh into the market right now. A lot of individuals think of doing this because they say, okay, now post-retirement, I'm going to have a little more time. Perhaps I should invest in equity. Sometimes it is FOMO. Sometimes it is because a lot of people are telling them, look, you have a lot of time in your retired life. You need to invest in equity. Should somebody who has never invested in equity venture into this if they are a senior citizen?
I would be very careful about it, Alex. In fact, even recently somebody asked me this query saying that the fixed deposits are not beating inflation. So I want to move my parents' money into equities. And I truly believe that, this decision of wanting to get into equities has to be based on two factors. Firstly, are you comfortable with the volatility that equities give? Because we've seen the good side, but you should also see the bad side of it, right? And in a year like 2022, when markets are down, how are you going to face this volatility? And obviously, equities are not going to give you a monthly return, right? So you cannot depend on them for a monthly return. So are you okay with that? Of course, I would not recommend stocks at all, right? I think even if a senior citizen wants to take an equity exposure, it needs to be to grow the money over a longer period of time. And I think a balanced advantage or the dynamic asset allocation category is a good category to get into, because there's, of course, higher equity exposure, but at the same time, there is rebalancing between debt and equity. So, yes, if you want to do it, please go with a mutual fund, not with stocks. Go with a dynamic asset allocation sort of a category and be clear that it is for long-term growth.
Term here, we're talking about at least 5 years, if not more. Yeah. But, something that we see for a lot of people who are at that age, Mrin, right now, and I'm talking about people that are of the age of my parents, for example, people in that generation, they've gotten very comfortable with owning real estate as an investment. We've spoken about that on this program as well, about the pros and cons of holding it. But it's a different argument altogether when you're talking about that group of individuals, because they've bought real estate 10 years, 15 years, 20 years back. They're continuing to hold these assets. These assets are giving them a monthly return in the form of a rent. So how should they approach this? Because you have thumb rules that state that real estate should not be a very large portion of your overall corpus if it is indeed being considered as an investment. So where's the balance there?
Again, I would put it down to your comfort factor, because A lot of the senior citizens rely on that monthly income, on that monthly rental income that comes in. And even though the rental yields are very low at 2%, the problem is that most people don't calculate it that way and don't know that it is 2%. But I think the bigger thing is the fact that there is this surety of income that's coming in. It's also inflation adjusted in a way because everybody has this yearly increase clause built in into their rental agreements. So to that extent, I think a lot of people tend to rely on this mainly because of the surety of the income that's coming in. Purely from a financial perspective, of course, there are other options that can give you better returns. But the point is the surety of the returns, which, probably also gives some peace of mind as well.
But see, and I take that point, you've elucidated very well. But just as a counter to that, these individuals are also comfortable with fixed income investments in the form of fixed deposits. You're talking about rental income, which will also be taxed at slab rate. You're talking about fixed deposit interest rates, which will also be taxed at slab rate. Here you're talking about 2% rental yield, which effectively is the amount of return that you're getting on your investment, and a fixed deposit that would yield you at this juncture upwards of 6.5%. Senior citizens would get more. So, wouldn't it make sense to get rid of those real estate assets that you don't necessarily need, that you're not living in, and because of the illiquid nature of the real estate, and maybe park money in fixed deposits?
Yes, absolutely. And that is something that I would recommend. But what happens is that with tangible assets, people tend to want to kind of leave it behind for kids. And, this is one of those legacies that people want to leave behind. But yes, I completely agree with you that you're better off in a fixed deposit because you're getting a fixed return. And it's liquid. So, if there's like some sort of an emergency, it can be accessed at any point in time versus real estate, which is completely illiquid. And honestly, I think one of the other things that people need to think about also is that the younger generations do not really want real estate. They may not want to get involved in it, especially if, for example, children are in different cities or different countries.
Very important point that you're raising. And the primary issue, of course, with real estate is, especially if you're talking about assets that are purchased in far-flung areas, you don't necessarily always get a guaranteed buyer for a property that you're selling. But okay, let's assume that you're holding the property. There's also an option that is available in the form of a reverse mortgage. Now, Mrin, this is not something that is spoken about for all the reasons that you have mentioned. It's a legacy asset, real estate is held very close, it's kept in the family. But should people consider reverse mortgage? Why should people consider it?
So I think if your investments are not able to get you the desired income that you need to lead your lifestyle, instead of being dependent on someone else, I think you should use your assets to good use, whether it is gold or it is real estate. So if you do own the house that you live in, certainly, I think it makes sense to go in for a reverse mortgage where you're mortgaging your house to a bank and they're giving you a regular amount on it could be annual, it could be half yearly, whatever it is, but you're getting a regular amount from there. So I think, again, even with gold, instead of loan against gold, you could always look at also partially selling off some of the gold, or you could look at taking loan against gold. But I think reverse mortgage is a good thing because you're getting that regular amount, and then once the individual is no more, then at that point the bank is going to basically sell the property and take their money back from there, right? So it's not difficult on people to do it. Of course, it is a little difficult to get reverse mortgage. It's not like you just walk into the bank and you'll get it. There are some difficulties in getting it, but I certainly think that it's better to use your existing assets and or use these dead assets and put them to some good use.
Just a couple of points on the technicalities of it. You mentioned that it's not easy to get, but there are a few. I believe PNB is one bank that people go to for reverse mortgages. The public sector banks are more approachable when it comes to reverse mortgages. what do people need to bear in mind? How much of you have loan to value ratios that are considered here as well, right? You don't get the entire value of market value of the property when you're talking about how much money gets paid out. You get a percentage of that. And what happens in the future at the end, and is this for a particular tenor or is it for the remainder of the person's life? And once that is done, suppose the market rate is significantly higher than the amount that was paid out by the bank, what happens to the difference?
So the difference amount is given to the legal heirs. Basically, the bank will only take back whatever it has loaned out. So that's the other advantage of this particular product. And as you rightly said, yes, I think it's easier to get it from the public sector banks. I certainly do think that also, as far as gold is concerned, I do believe that you should also put your gold assets to some use.
Certainly. All right. So I think we've covered most of the bases, and it's not an easy conversation to have, I guess, but it's something to consider if you are pushed into a corner. Mrin, thank you so much for taking the time.
Thank you.